So briefly, let's go through a quick history of Bitcoin. There's a video that preceded this that went through a deeper history, but this is going to be a visual representation of the development of the Bitcoin industry and the crypto industry as a whole. So in 2008, that's when Satoshi Nakamoto, the pseudonymous creator and inventor of Bitcoin, released something called the white paper. And the white paper is basically just an informational paper detailing how this technology works and how they plan on making it work in application. After 2008 and 2009, the very first Bitcoin transaction went through. It was between Satoshi Nakamoto and someone named Harold Finney, who was a computer scientist in Silicon Valley, I believe, or in that area of California. He was one of the early developers that helped Satoshi Nakamoto think of these ideas and create the first representation of Bitcoin. And the very first transaction was from Satoshi Nakamoto's wallet to Hal Finney's wallet. In 2010, the first transaction of Bitcoin for actual goods and services was done. This guy named Laszlo, can't pronounce his last name, I believe it's Hayek, bought 2 pizzas for 10,000 Bitcoins. So 10,000 Bitcoins today is somewhere around the ballpark of $3 billion. So essentially, it's the most expensive pizza order that was ever made. Also in 2010, the first crypto exchange came out. It was bitcoinmarketcap.com, and it launched and allowed individuals all around the world to start transacting and to start trading Bitcoin. In 2011, the first competitor to Bitcoin came out, which is called Litecoin. A developer from Google's core team ended up taking Bitcoin's idea and wanting to improve on it to make his own technology. Now, the way that Bitcoin works is if the majority of the people who run the network don't agree on your changes, it never gets implemented and the changes don't happen. So what Charlie did is he took this concept of this new Bitcoin that was supposed to be faster and easier to use, and he created something called Litecoin, which was the first major competitor to Bitcoin. The reason that this Litecoin situation is important is because it started a wave of things that we call now the alternative asset space. At the time, they were called altcoins, and alt standing for alternative to Bitcoin. So altcoins basically started to come out as ways to make Bitcoin faster, cheaper, and easier to transact with. The reason they're called altcoins is because all of these side projects had a core development team that worked on them, and they still have a board that manages that coin or that token or that project. So the difference between these alternative assets to Bitcoin and Bitcoin itself is that Bitcoin doesn't have a board of directors to change the code, create new units of currency, or to mess with the system. The rest of these alternative coins, they had those flaws. So anybody on the core team could print more coins the second they wanted, and it would devalue the value of the coins in the market. So while we look at this development and we look at the evolution of the space, it's important to recognize that Bitcoin, for what it was created for, is supposed to be decentralized, public, anonymous, and a fixed supply. Those things protected it against attack from a government, from a central point of authority, or from any hacks. The rest of these tokens, because they have a central point of authority, there's a lot of risk of failure. Somebody could hack their backend systems and change some of the code. Individuals could create more currency if they choose to. Individuals could change the rules of how that project operates or how that coin or how that technology operates. And so the risks of what you bought into changing are always there with the alternate coins. But with Bitcoin, what you bought into is what you get. Now, moving on, 2012 is when Bitcoin first hit $100. And then the following year in 2013 is when price hit $1,000 per coin. The year after, in 2014, the largest exchange at the time, which is called MTGOX, got hacked, and over 850,000 Bitcoins were stolen, today valued at a little bit over $6 billion. That was the largest crypto hack to date. So it's important to recognize that when this hack happened, a lot of people started to have skepticism around Bitcoin and crypto in general, because they started to think that people's wallets had gotten hacked. What's important to realize is that Bitcoin, the actual network that was doing these transactions, never got hacked. What got hacked was this MTGOX platform that was taking ownership of everyone's coins. So anytime that there is a central point of failure, there's always a chance that someone can hack it, and there's going to be some trouble on that exchange or on that platform. In 2015, Ethereum, which is now the second largest cryptocurrency, is launched by Vitalik Buterin, an individual who was a Bitcoin writer and a Bitcoin enthusiast. He figured a way that we can build on top of the Bitcoin platform and to create a second layer, and he created something called the Ethereum network. In 2017, this was the first major bull run of the Bitcoin market that got mainstream recognition. Bitcoin reached a new high of 19,700. which is a huge deal at the time. In 2017, everyone had gotten exposed to Bitcoin. It was all over the news. And that's where we reached that peak speculative bubble. In that bubble, prices came crashing back down, and we had a quiet period between 2017 and 2020 where price was ranging, making slightly higher highs, but it wasn't really continuing that trend that had first started in 2017. 2020 was the next big shakeup for the crypto market. The pandemic that took the world by storm crashed Bitcoin, and Bitcoin's price hit a low of $3,900 in May of 2020. What's important to recognize about 2020 as a historic year for Bitcoin is that it started off at 3,900, but price ended the year at 34,000. So that incredible gain made a lot of people interested in Bitcoin. Individuals who had invested at the crash in May 2020 started to see the benefits of investing in Bitcoin and the intense returns that can come from being involved in a bull market. In 2021, we had reached the peak of the bull market. Prices crashed from a peak of $65,000 per coin down to 30,000 per coin, which it sits at the making of this video, which is May 2021. So that's a brief history of Bitcoin and its development. Just to recap, it started in 2008 with Satoshi Nakamoto, the pseudonymous creator. Other coins started to come along the way. In 2015 was Ethereum's debut. 2021 was the end of the speculative crypto bubble number 2, and prices came crashing back down, getting us ready for the next phase of the crypto market cycle. So if we can recap what Bitcoin is a distributed ledger that contains public information about all the transactions that happened on the network. So any individual that transacted Bitcoins, bought Bitcoins, sold Bitcoins, traded Bitcoin for something else, those transactions show up on the Bitcoin network as long as it was a valid transaction. So Bitcoin is this public ledger where we can see everything that's happening, but it's in an anonymous way. So names aren't attached to all the transactions we can see, but instead wallet addresses are. The beauty of this system is you can maintain your privacy to do whatever you want with your transactions, but it's public enough that if there's nefarious activity, the public can know about it and can move to act. The other beauties about Bitcoin is that it's decentralized, so there's no central authority making decisions for Bitcoin. It is based on computer algorithms, and everything about Bitcoin's procedures are based on that algorithm. Bitcoin also has a distributed system, which means that there is no central point of failure, and the network is spread out geographically around the world to maintain the security of that network. So now that we've gotten a brief introduction into Bitcoin, the later videos will explain some of the nuances and some of the details involving these transactions.